Good afternoon, everybody. Today is Wednesday, the 23rd day of April 2025. So I have my list of things that I want to discuss. At the end of last week's meeting, I said I was going to do the NQ channel and the swing trade channel this week, and I am going to do that a little bit. But one of the other things I want to discuss with you guys was stop running, and really, is it a thing? And what can you do about it to position your entries better to take advantage of the tools that we have that can help you see places where there might be a stop run. Now, there's a whole bunch of things that you can actually get that are already created. Like if you do this volume profile thing, it's visible range volume profile is what it is. Basically, what it shows you is where there's a lot of volume, but you can see that you don't need something on the side to see that. And so I'm just gonna get rid of it. Right? It's just noise. So I'm just gonna delete that because it's just noise. Basically, it's saying the same thing here that you can tell just by looking left. You can see here. I'll just minimize this one instead of getting rid of it completely. You can see that right here, there's going to be a lot of volume there because the price kind of stuck there for a little while. So there's going to be a lot of volume right there. Now this is a 30-minute chart on the NQ. All right, we can look at any kind of chart you want, and it's going to do the same information. It's going to have the same information. So the thing about running stops. Let's look at a DOM. Just for instance, here's a DOM. This is gold. All right, you see that number right there? It's got a lot of orders at it. All right. Anytime you see an anomaly like that, that's a lot of orders in one place. All right, like that one right there right now. That one right there, the same spot, and that one down here. Now, the way that DOMs work, I mean, not so much the way that DOMs work, but the way that the orders tend to work. Let me go to gold because that was a gold DOM. Let me just turn this into gold. The way that the orders tend to work is they go to the areas that have the most on them. If you were to sum up the total here and sum up the total here, you would see that some of this total is higher than some of that total. If you had a reason to go long, you could use that information to manage your trade. All right, use that as target information while you're in a trade. You don't use it as an entry point, but you can use it to manage a trade when you're in it. That's where price should go. Now, that's once you're in a trade. All right. And basically what that's telling you is where prices are consolidated already ahead of time, where people's other targets are, where people are trying to sell. Because you don't know when you enter a trade, like let's say you enter a trade here and you see up here, it hit this area of resistance several times and it sold off this area of resistance several times. So there's likely to be a larger number right there at that area, right? Without even looking at the DOM or anything like that, without looking at the volume profile, there's likely to be a big number there. Okay, and that thing that I showed you, it was, I don't know what it's called, volume profile. It's this thing, visible range volume profile. There's likely to be a big, right here. That's what I was saying. It went up and it hit that area, and there's likely to be a big area of volume right in there. Okay, you can see that that's there. You don't need to have something on the side to show you that. And in my opinion, the fewer things you have on your chart, the better. All right, that is kind of why I did everything the way that I did with TV trades. So you don't have any indicators up here. You just have arrows telling you what to do. You don't have any indicators, any lines or anything like that. I could put a bunch of lines on there, but that creates ambiguity. Putting the oscillator down here was a big move for me because I didn't even want to do that. But it seems to have helped you guys out a lot. So, in the end, that's all I want to do is help you guys out and myself. So I put the oscillator down there, but I really don't want to have lines on the chart because that creates ambiguity. Like, is it turned? Is it too high? Is it too low? Is the gap too big? All that kind of stuff. Did it close above it? Did it close on it? Did it close below it? All that kind of business. But when you have a trade entry, if you go here to here, and you go to more, and you go to risk management, right? These are the brackets that I set up with the trades that I use, with the range bars that I use. These are the brackets that I set up. All right. So when I put a trade on, I know how far away my stop is going to be every time I put a trade on. I know exactly where my stop is going to be. Now, when you look at the market, here, I'm going to draw this again for you. I draw it every time, it seems like. But when you look at the market, it's going up. Oops, it's going up and down and up, we'll say. This area right here is probably going to have a lot of orders at it because it's a pivot, and it's probably not the first time it's pivoted there. There's probably place over here where it was a resistance area, all right? And it's probably not the first time it's had a pivot there. So as you look left, and that's what I was just trying to show you right here. As you look left, you can see that there's a lot of other times here that area right there was a resistance. Right here, right here, right here, and now it looks like it could become support. All right. You have all that information ahead of time. In each of these meetings, I'm going to try to tell you guys a little bit more of what the information that the market has given you, what it's showing you. And so this is significant. Now, how can you use that information, right? As far as run and stops goes, if there is a large number down here, when you look at the DOM, all right, if there's a large number at the bottom or at the top of this, price is going to gravitate toward that number. You don't know. Price is going to gravitate toward that number. That's just the natural way that the markets work. All right, it's going to gravitate toward that number. Now you don't know whether they're buying to cover, they're buying to open. You don't know why that order is there. You just know that it's there, and price is trying to get to it. Price is going to get to it eventually, probably go through it, and go to the next level. All right. So you have that piece of information, right? Everybody with me so far on this? I know I didn't go through the whole how do you take the free trial and all that, but that's because it seems like the first 30 seconds is where people drop off when they're watching this, or maybe the first 9 minutes. But but you have that piece of information that there's a lot of orders probably consolidated right there. So if you get an opportunity to enter, you don't want to have your stop right there. All right, you don't want your stop to be right there. You want your stop to be down here, or wait till you have an order way up here, so your stop's like right here. Right? Think about this. Every time you have a leg up, let me draw for you. Every time you have a leg up, it's trying to get up to the prior swing high. Okay. Now that should be, if you're gonna create the same leg as the past leg, it should be roughly 50% of what the last leg was. All right. Most of the time, that's going to be enough room to get your stop to break even and get some profit in the trade. You usually get the goal for the day, is what I try to do. Most of the time, that's going to be the case. All right. Now, using the trigger and the tools that we have, you can usually get in down here at the bottom or pretty close to the bottom. But consider this. If you have an opportunity to get in right here and, well, get in like, say, right here, and your stop is right here at the swing low, you might want to consider waiting till it pulls back a little bit so your stop is just a little bit below the swing low. Right? Because then if it comes down here and gets everything that's consolidated right here and then it starts to run in the other direction, you're going to be in the trade from a little bit lower and you're still going to make the same money or better because it's trying to get up here. Does that make sense? You all following that? You know ahead of time, because we're using range bars, you know ahead of time how big your stop is going to be. Right? You know that ahead of time. Now, I am of the school where you don't change your stop ever. If this is the size range bar you're using, this is the size stop you're using. Always. All right? You don't change that. You can change the range bar if you want. Then you change the stop. But if this is the size range bar, this is the size stop. All right? That's the way that I do it. Now, you guys can do it however you want. I have a good history of success doing it the way that I do it. But you can do it however you want. But whatever you do, whatever you decide to do, make sure you stick to that. All right? It may not be the same exact rule that I have. Your risk may be bigger, your risk may be smaller. But make sure whatever it is, you stick to it. You can't change your risk management rules, especially not mid-trade, but you can't change risk management rules. Once you do that, you don't have a trading plan. All right, you have to start over again. You have to go back to demo and start over again. After I move the stop to break even, how often do I trail the stop on the ES and the NQ? Okay, that's a fair question. I'll answer that in a minute, Masood. I'm going to get to that. Okay, I'll get to that. But whatever your risk management strategy is, you have to stick to it. All right. If you start changing your risk management strategy around mid-trade or like even midday, then you don't have a trading plan. You should not be trading real money. If you're going to be doing that, then just don't trade real money. All right, and really, don't trade. I wouldn't even trade demo if I didn't have a plan. And you start trading demo, you're going to make bad habits. If you don't have a plan, you start trading demo, and you're not really doing anything by any set of rules. And let's say you get lucky, and and for 2 or 3 days in a row, you get lucky, and you're not really following any set of rules, but what you're doing is kind of working. Um, and you think you can do that forever? Well, I, it's never been forever for me doing that. Right? The only thing that's been consistent for me is when I act consistently, I get consistent results. If the markets do what I expect them to do, if they and all they have to do is move up and down. That's all they have to do. And I adjust with the markets. I don't change my risk management strategy, but I change my trade strategy. All right. If the markets are choppy, I have a strategy for that. If the markets have long leg lengths, I have a strategy for that. And that's basically all you have. Those are two different market types. That's it. You have long leg lengths and you have chop. Long leg lengths, use a conservative trade. Short leg lengths, chop and short leg lengths, use the aggressive trade. Right? And you're probably saying, well, how do I know which is which? Well, you don't ahead of time. You have to wait and see what the markets actually give you. Like right here where it went from this one bar into the oversold to one bar into the overbought to one bar into the oversold to one bar into the overbought. That's chop. You can trade that. Now, you can trade it two ways. You can trade it conservatively and wait till it comes out of the oversold. If you have a blue background, wait till it comes out of the oversold and buy it when it comes out of the oversold. Or you can trade it when it goes into the oversold if you know it's going to be choppy like that. If you have a good feeling that you're going to be in chop like that, like this one right here. After it did this one and this one, we had a good feeling that this one was going to be chop and this one was going to be chop. You can switch your game plan right up and say, okay, I'm going to buy it when it goes into the oversold instead of when it comes out of the oversold because the leg lengths are going to be small. All right. Raise my chart up. I've got it down here on purpose, Wayne, because I was drawing right here. I'll lift it up in a minute so you can look at what the price is actually doing. But I got it down here on purpose. Okay. Because I want to talk about the price action. Without even looking at the price action, I want to talk about what the indicators are showing, what price action is doing. And that's what I'm doing right here. When you have long leg lengths like this, you're going to have flat spots at the top like that. When you have long leg lengths down at the bottom, you're going to have longer pullbacks. So when you have a longer leg length up, the trade that you want to do is not going to be an aggressive trade. If you have a long leg length up, you want to do a conservative trade. All right, wait till it comes out of the oversold. That way you don't get hit on the flat spot. All right, wait till it comes out of the oversold, then it gets all the way over here. So this is probably a couple of bars that go all the way down past the midpoint, and it gives you a trade probably right here at the midpoint. All right. So the whole thing about running stops, it's not really, you can call it running stops, but they're not really aiming at a stop. All right. They're not choosing, they don't know whether it's a stop or an entry. They don't know that. It's just a number. It's just a number that the market is gravitating toward. There's not a human that says that's the number I'm going to go toward. All right. It's not one human that says that's a big number right there. I'm going to run. That's where everybody stops. Or I'm just going to go take out all those stops. That's not how it works. It is a big number. You don't know whether it's a stop or an entry. It could be an exit or an entry. You don't know. And neither does a computer. It just sees a number and it goes for the number. So is that running a stop? Maybe, if it's your stop. But if you got a limit order waiting there to enter, then it's not a stop for you. You're benefiting when somebody else stops out. It's just the way it works. So I spent 15 minutes on that. Let me say this little bit because I haven't said it yet. If you haven't taken a free trial, go here to tvtrades.com and just go all the way down to the bottom. Click on one of these orange things. Go all the way down to the bottom, and it's $25 a week after the free 3-day trial. $25 a week, or $90 a month, or $9.70. I know some of you guys said you want to switch from the weekly to the monthly. You have to send me an email telling me that. All right, send me an email telling me you want to switch from the weekly to the monthly. I will send you a link, and I will prorate whatever you paid, whatever you got left in your week, and switch it to the monthly when you sign up. Okay. It's a simple process from my end and from your end. And you don't have to wait until the week's over. You just do it, and I'll prorate whatever it is. The prorate happens to the minute. That's the way Stripe works. I think it goes down to the minute. But, but that's it. All right, do that stuff. The majority of the people, a lot of people come in on the weekly. If you're relatively new to this stuff, you come in on the weekly. But once you understand what's going on, then the majority of the people switch to the monthly. The 997 is the real deal, but this is a considerable savings over that. All right, so it's up to you guys, whatever you want to do. Back to the charts, because I don't want to spend a lot of time talking about that stuff. So down here, just judging by, hang on, let me put this back here. All right, I'm just judging by what's going on right here. What do you think price did? Anybody? If I were to draw a line on this, do you think price looks like this right here? Or do you think price looks like this right here? Yeah, it's chop. Right, it is. It's chop. When it goes up and down like that, it's chop. So, I mean, you can see once it goes up and down like that pretty quick, I mean, you can easily switch modes without even adding another indicator on or anything. I mean, you don't need another indicator. This is everything you need right here within the range tree. You don't even have to add, you don't have to add this on there or anything like that. I don't have the right password in. By the way, this is not the right password. This is the old password. If you have not updated, everybody that is active and everybody that is on the trial got the new password. That is the old password. I did finally change the password. I hadn't changed it since January, but it was time. One other quick thing. As of May 1st, I'm dropping the web page. The private web page. As of May 1st, I'm going to drop the private web page, and everything's going to go into Telegram. Okay, so as I was saying at the beginning, you guys really need to get Telegram. If you don't have Telegram yet, send me an email, and I'll send you the information you need. It's a pretty simple process, and it's free. Okay, so you can tell down here that it's going to be chop, right? And then finally you get this long dragged out one right here. So that's going to be a longer leg somewhere. And then it goes up here, gives you a much longer leg. And so you got another longer leg. So that's when you switch gears again, right? It's easy enough to do. If you want to trade a bunch of times, then it's easy enough to switch gears and do it. If you just want to choose one thing and stick with it all day, then that's fine. But you have to identify early on what it is. And really, if it changes, you have to change with it. Because the aggressive trades don't work well when you have a trending market. They don't work well at all when you have a trending market. All right? The conservative trades work well when you have a trending market. If you have a choppy market, the conservative trades don't work well. You get 1 out of 3 maybe with the conservative trades. All right? And you don't want that. So if you go and look at this, you see the market was really choppy right here. So if you were being aggressive, selling because it's got a blue background, you were selling when it went into the overbought, you would have sold right here at the open of that bar and taken profit. You would have sold, you didn't know it was going to change color here, so you would have sold right there too at the open of that bar and taken profit. All right, you would have been able to do that. Then you get a longer leg length that gives you this down here. So you got a longer leg length down here, so you're probably expecting a longer leg length on the top on the pullback. So you get a flat spot up there, so you're expecting a flat spot down here, so you're waiting until it comes out of the overbought or oversold. So right here, because you had this flat spot, you'd wait for this flat spot, switch gears, go to conservative, it comes out of the overbought, you go down here. Because it was a long leg length, you expect you're going to get a long leg length down here. You wait till it comes out of the oversold if you're going to trade in both directions. You see? Are the black bars on my chart the sniper or the beta trade? The black arrows, you mean? What about the 1356 to 13? The black arrows are part of the swing trade stuff. Okay, that's part of the swing trade stuff. I'm going to get to that. Okay, that's what those are from. Now, that was Wayne, and hang on, let me go down to Dan. Dan, what about the 1316 to 1325 right here? 1316, this right here. Right. Well, it really didn't go into the overbought anywhere in here. Came out of the oversold here, so you'd be waiting for it to get into the overbought, and it didn't get into the overbought until right here. So you would wait for that one to come out of the overbought, right? Because it was so long getting into it. You had this long leg down here, and it took forever to get into the overbought, so you would sell it right here at the open of that bar. Actually, it would be the open of this. It would have been the open of this bar, actually, is where it would have worked out. It would have sold the open of that bar. That was a gap up to the open of that bar. That would have been what you sold right there. Okay, the question was, what about the 1316 to 1325 area? Is that chop or leg? It was chop in here because it wasn't going into the overbought or into the oversold, so it was choppy right through here. Okay, it turns into leg when it stays in the overbought or stays in the oversold. That happens when you have a longer leg. Okay, Dan. My watch is making my hand fall asleep. So, what I wanted you to take away from all this, I mean, the title of the thing was, are they running your stops? No, you don't know that. You know, it might hit your stop if your stop is in the wrong place. Or even if your stop is where you think it should be. Think about that when you get into a trade. Don't change your stop, but change your entry. You know, those of you guys that have been watching me in the mornings, I've been today I couldn't because it was really active, but the last week or two, I've been trying to show it to you more when it's happening. To show you more like, like right here. This is the leg length up, right? So this is your leg length up, and right here would have been an ideal place to enter. This isn't a bad place to enter right here, but now when it gets, your stop's going to get to break even, it's going to be right here, right? Your stop's going to, what is this, 19 range? Yeah, so your stop's going to get to break even right about here. And you got this much left in profit. So right now, it's not bad. The entry point right around this area is what you wanted. So that would have been an okay trade to take right there. Okay, and now if this puts in a higher swing, and it should just a little bit higher, it should get to about right here, right? 308 and a half. It should get to about there. I don't know that it's going to. But what I'm looking at is this right here. Okay, look, I guess I can just do this. Let me do it this way. I can take this and, come on, man. This, come on, that, and just move it over here. 308 and a half, I said. It's actually 307 and a half. Right there. That's what it should do. All right, it should do that much. And if it does more, that's great. And if it doesn't, well, it doesn't. But this would have been a decent trade right here because of where it was. Okay. And so what I was suggesting, you see how that got exactly where it should have gone. What I was suggesting in there was, now if we get a down close on this and we get an up close on the next bar, it'll be just like the last trade. All right. What would be better is if we get a down close on this and then we get a wick down a little bit and then an up close on the next bar. All right. Get a little bit of a wick down and then an up close would be better for the next entry. It's showing a little bit of weakness right here though. A little bit. You see the last leg length was this big, then this leg length was this big, and then this leg length was the same size. And the next one will probably be smaller. So we need a down close to get this down into the oversold and then possibly have a long trade after that. All right. Do you guys all see that? This is gold, right? So I could put this, well, I could have put that last trade on. I didn't put any trades on yet, but look at the DOM. Okay, you see this number right down here, 3305. If we got the down close on this bar, we'd down through that number at 3305. So I would look for a down close on this bar. I mean, we're not going to have a trade anyway, unless we do get a down close, because it's got to get into the oversold to give us a trade. Now I know I have the, I know I have the optimum on there with the black and the white. But what I'm talking about is just taking trades that come out of the overbar or out of the oversold with the direction on the background color. All right, so you have a blue background. You're looking for things to, you're looking for long trades, opportunities to go long. And this right here is a pretty choppy spot. So you could go long on a down close right here. When it gets into the oversold, you could go long at that point. That would be a pretty good spot to enter. I think it's going to close up, and so it's going to take a couple of bars for this to happen. But put that back over here on the side, and we'll see what it does. Does anybody have any questions about that stuff? It did give the up close, so there's no good trade here right now. All right, this is starting to go sideways and showing more, a little bit more weakness. It's showing a little bit of chop right here. Okay, what time is it? 3:25. Yeah, the markets are slowing down. It was pretty wild this morning. I think I had 50 something trades today. 56 trades this morning. Most of them on gold. And gold, I hardly got anything. The last couple of days I was killing it on gold, and then today I hardly got anything on gold. And I had like 28 trades on gold, and I got 30 ticks. It was awful. I hardly had any trades on the NQ, and I was up 165 on that. 165 ticks with one contract. That's all with one contract. Those of you guys who don't know. A lot of you guys watch me do that in the morning, but not all of you. So, the swing trade stuff. All right, it's putting in a higher swing. So we didn't end up with a trade setup out of this. All right. So what this indicates right here, when it doesn't actually get into the oversold, it's indicating that it's starting to trend, starting to give you a stronger trend. All right. What I'd like to see is this whole thing right here. That's what I'd like to see. That'd be nice if it did that. It'd be a slow grind up is what it would be, you know, if it did do that. I don't know that it's going to. It could do that and give you a down close on this bar still. But we'll just have to wait and see. Okay. Swing trade stuff. You guys want to talk about that? These are the alerts that I created for the swing trade stuff. I don't have it available to you guys yet. I'm still working on it. You'll see when I show you some of the results. But I do have it running out to the Telegram channel with swing trades in it. Yeah, let me minimize this so you don't have everybody's names and stuff in there. There we go. Here, these are some of the swing trades that are generated today. Right, let me see if this goes back. Here we are, April 23rd. So I did this morning, I think. I got it going. You can see the decimal places are not exactly right. So it's still a work in progress. But the ones on the NQ 5-minute, NQ 30-minute, and the larger time frame NQ ones, and the QQQ 30 and 5-minute, and the SPY 30 and 5-minute, the ones with the odd decimal places. Those are all things that were triggered today. If we go in here, we should be able to see those over here too. See all these ones that say sheet on them? Those are all going to go away. Those are the ones that go out to the web page. Here it is. Here's one right here. The QQQ. And it was a 5 minutes. And what did it say? It was a 5-minute buy at 456.84 with a target of 458.61 and a stop of 455.62. And I don't know when that was. What time was that? 14:35. So it was a buy right in here somewhere. Okay, I don't know why it's not showing on there. Do I not have it on? I don't have it on there. Okay, this was it right here. That was the buy right there, I think. And the one before that was right here. So the one before that on the QQQ said to buy 456.42, the target of 450.96. I think I clicked on the wrong thing there. Did I? Was that a buy? Oh, it was a put. No, it was a sell. I'm clicking on the wrong one. Well, this was a sell on the QQQ. I gave you this one a little while ago. This was at 1400, so that was this one right here that said to sell. And the target on that is 450.49. So the target on that is right here. And that's on a 30-minute. So we gave you that right here. Give that indication right there with the target down here. And the stop would be right up here somewhere. I think 460, I think is what it said. But that's the kind of thing you get with the swing trade. All right. And it does it over here on the side. It does it over here because of the way that I set it up. If you go and look at it, that was a 30-minute QQQ. This one right here. Okay, the notifications I set up to do something over here like that, to send it out to Telegram like that. You see, it just notified this here, this here. My phone just went off, and it did all the notifications right here. It even went off in my headset. So it did all these notifications right here, just happened all at once for this trade. Okay, so you can have all that set up. That's what I'm working on. For you guys, okay? Your Telegram channel is not working since I updated the password. Your Telegram channel? I didn't upgrade the password in Telegram. Abe, the only place you got to put in a new password is right here. Okay, is right here. This is the old password. Right, it's inside the TV Trades range trigger. I don't think in the beta one, I'm pretty sure I took the password out of the beta one because it's temporary. All right, and you guys don't have access to this one yet, so I didn't put a password in there either. Okay. You know what the new password is, right? Okay. I didn't put any letters in the new password, just so you wouldn't have that uppercase, lowercase issue. I made it all numbers. And I made it really easy numbers to remember on the keypad, too. Alright, so this is what the swing trade stuff looks like, okay? And this is what it looks like here on the QQQ, but you can do this on anything that you want. The old beta version. Which old beta version are you talking about, Tim Joe? Of the trigger? Because I want to make sure that I don't screw you up when I finally take it out of beta and I put it together somewhere else. I want to make sure that, and with it's using the beta version. Oh, the try trigger. Yeah, okay. Yeah, that's this one. This guy right here. And you know, the slingshot's in the same place. The thing that I might take out or make optional are these vertical lines right here. And you know, the information that's down here, how much it runs from a trigger. You can put that in or take that out. You can put that in or take that out by going in here. That was a question somebody had for me the other day. Can you shut those off right here? Okay. That'll shut those off if you don't want them there. And that's the lines right there. Okay, so if you don't want the lines, you don't want the labels, you can turn them on and off right here. Okay. You don't have that password? Well, it doesn't have a password in here. You don't need a password for this one. If you're, if you're on the trial or if you've asked for access to the beta, then you have access to it. If you haven't asked for access to the beta and you're a subscriber, you can get that. But Jake, you got the password emailed to you about 5 times. Here, let me do this and send that directly to you. No, I tried to send it directly to you, but it didn't work. Okay, well, I don't know how to send it directly to you. Let me test this and see if it goes directly to you. No, it says send to all. Did that go only to you, Jake? I think it did. Me to you. Yeah, okay, so I can do that. There. Okay. Alright. The vertical lines are what you trade off of? Okay. Well, I just showed you how to put them on and take them off. They were there to indicate when a trade is coming up. Alright, that was the original reason I put them in there. Now, I built off of that and I made a whole bunch of other things. So, I'll leave them there. Right? I don't want to see what I wanted to get away from was this, having like a million things in here that you turn on and you turn off, and I wanted to get away from that. Like in here right now, if you have the optimum trigger displayed and the optimum trigger alerts, then you have a different set of alerts that come out, and when you turn this on and off, it enables and disables things on this side. And I don't want to create things that are going to create questions for you guys, because then that means you guys got to ask me, and then it might take me 2 days to get back to you. So, the QQQ and the beta tried triggers, see the last black arrow, no label on the bottom. Yeah, that's because the label on the bottom doesn't necessarily correspond to the black arrow. This black arrow it doesn't have any label associated with it. This black arrow doesn't. This black arrow is from the swing trade. Okay, there is no label associated with that one. I know, didn't I have something in here too? Yeah, enable the try trigger or arrow. That's what you're talking about. Okay, you're talking about this one. And there will be times that you don't get the label associated with an arrow. They're not exactly the same. Okay? But that's what you're talking about, right, Wayne? So not to confuse things. Let's just leave that black arrow out, and I just wanted to put that on to make sure I covered putting the lines on and taking the lines off, because that was an issue. Alright. Has anybody asked any questions that I haven't answered at this point? if you did, just copy them and paste them in again, okay? Um, the thing that I wanted you to get out of this, one thing I wanted you to understand out of this is when you're trading and you have time to really think about it. All right. Now this morning I didn't really have time to think about it, and I know I had some questions that were being fired at me this morning, and I felt like I was almost being short with my responses because I was trying to trade. I was trying to take the trades, but I know you wanted to answer the question, so I had to stop and say, wait a minute, let me stop and then just look at one market and answer your questions. Because if I had all four markets going like I did, then my mind was going to be all over the place and it was going to frustrate me. So, looking at just one market, like this, for instance. Now, this is a 30-minute, so this isn't going to happen. Nothing's going to happen fast on this. But when you have a trade opportunity and you know how big your stop is going to be ahead of time, because we're using, well, not here we don't, but with a range bar, like let's say using 100 range, you know how big your stop is going to be ahead of time. You don't want your stop to be at the prior swing high or at the prior swing low, all right? And so the only way to make it so it's not that is to let price pull toward you a little bit. If you're going long, let price pull toward you a little bit. It's going to make you miss out on some trades. It will. But usually if you get in, like right here, let's just blow this up. This is probably a good example. If you were to get in right here at the open of this, your stop would be right down here, because my stop is always a little bit bigger than the bar size. All right, unless you're trading within a bar, the stop is always a little bit bigger than the bar size, so it's going to be down here. And if that happens to be the swing low, then that's fine. That's good. But if for some reason there was something else, a different low that was like right here, you don't want your stop to be right before that. So you'd wait for a little bit of a pullback so your stop is down a little bit lower. Okay. Like this right over here, for instance. Right, well, that was a little bit lower than that. Just a little bit. So you'd want your stop to be a little bit lower. Now in this case right here, your stop would have been down here the way that I put the stops. It would have been down there. But that's kind of the scenario that I'm talking about. All right, you don't want your stop to be at the swing low or at the swing high, depending on what direction you're trading in. Because they're not going to run your stops. But price, if it's at an area where price is consolidated, it's going to try to get there again. Especially if you can see it on the DOM. If you can see a number on the DOM, like that number right there is going to get hit. That number down there is going to get hit. Now, it's suggesting that it's going to go down. So it might hit this one first and then go up here and hit that one because it's due for a pullback. But those numbers are going to get hit. It just hit that one. Now, the other number was up here. So when it pulls back, it's going to hit that other number. It's just the way the markets work. Those could have been entries. They could have been exits. They could have been stops. They could have been targets. You don't know. They're just numbers, and the market's going to gravitate toward them. So you got to keep your stops out of the areas where the market's going to gravitate toward. That's basically what I'm suggesting. Okay, and because we use range bars, you know ahead of time exactly where your stop is going to be. So you have that advantage. That's one more advantage of using range bars. You know ahead of time exactly where your stop is going to be. You don't have to wait like with a 30-minute. You have to wait till the bar closes and say, okay, well, if I were going to go short, my stop would have to be up here. Okay, so you don't know how big your stop's going to be until the bar closes. I mean, it could end up here. Could end up closing up here. You don't know. But you do know roughly where your stop's got to go, but you don't know how big it's going to be. Now, the way that I've created the stop for the swing trade stuff, I had done it so it looked at the swing highs and lows. I had done it looking here, looking at the swing highs and lows. But that gets complicated because sometimes when it's looking back, the distance from the entry to the prior swing high and the prior swing low is going to be backwards. So your stop is going to be bigger than your target. Or sometimes it might even be your stop is beyond your target. And it comes out backwards sometimes. I did have a check in there for that on some of the alerts, but I've done it a different way as far as the swing trades go. It's the stop is always going to be smaller than the target, and it's always going to be in the right direction. And yeah, I'm not using the swing highs and lows for targets and stops with the swing trade stuff. Okay, just so you guys know. It's using some other math that I did that that works out pretty well. And a lot of times it's going to work out to be the swing high or low, but it's not exactly the swing high or low. It doesn't actually look for the swing high or low. It might be a little less than that sometimes, or a little more. Like in this one right here. What time was this? It's on the NQ 30 minute at 1:30. So if we look in here at 1:30, NQ 30 minute. Do I not have it in here? I might have just the arrow. I might not have an alert on that. Yeah, I don't have an alert on it. But it's got to be one of these. It's got to be one of these alerts. Like in this one right here. It was a 5-minute. Well, let's look at this one so it actually looks at something above it. This was at 1340. 1340. Is that QQQ? It should be over here somewhere. This one should be showing at 13. Oh, it's on a 5-minute. That's what I'm missing. Well, here's an SPY one on a 5-minute. That's at 35. Here's a QQQ on a 5-minute at 35. That's this one, I believe. Yeah, that is this one. Okay, yeah, it's the beginning of the bar. So this one right here says current price 54.14 with a target of 56.09. So that was this one with a target of 56.09. So the target was going to be, that can't be right. No, that can't be right. Target 456.09. The current price 454.14. 454.14. Is that this one? Oops. Is it this one? 454.14. Where's 454.14? I'm looking for an entry that's at 454.14. I don't see one. Anyway, it's going to be something like this. It'll have an entry like this. These arrows I don't think correspond to the alerts that I created, but it's going to be something like this. You have an arrow that's going to give you some kind of an indication up here where to look for the target. It may be at the swing high, maybe beyond the swing high. When you see that stuff, when you look at the markets and you see that stuff, I mean, you can make your decision. You make a game time decision that right there is what I'm really going to look for. All right, the target is based upon some math that's done before there's actually a market like this. The swing highs and lows are created. But when you actually get the trade trigger, from that trade trigger, you can say, all right, that swing high is what I'm going to look for. Maybe right below that swing high is what I'm going to look for. And it's going to give you the stop. The stop's always going to be a little bit bigger than the bar that you're in. All right. No, I think it's not always going to be bigger than the bar that you're in. If the bar that you're in is bigger than the last few bars, then it might be smaller than the bar that you're in. But it's not just directly looking at swing highs and swing lows. Okay, sorry to post this again. It seems that it's being lost when the messages. After you move your stop to break even, how do you... Okay, on the SNQ, that is... I said I was going to answer that. Sorry about that, my son. On the NQ, let's go to the NQ 50 range. Okay, so the question was, how do I move my stop to break even, or when do I move my stop? After you move your stop to break even, how often do you trail your stop on the S and the NQ? What I look for is areas of support and resistance. Okay, and like let's say I get short right here, or let's say I was short right here. Okay, if I was short right here and it went down to here and I moved my stop to break even, as price kept going, when it got down here, when it got pretty close to right down here, I would start locking in profit. Right, so I would get pretty close to the price at that point, because when it reaches the prior swing high or low, that's usually an area that's going to it's going to be support or resistance, even just a little bit. It might kick it back halfway, half of the leg that it's made on the way down. But you don't want to lose that, right? It might create another trade setup like this one did. We got down to here and it moved up right here. I don't know what the order was in this, but it got down to the swing low and then it bounced back up and then it went down and then it came back up and gave you another trade. So you could get out right here as it's approaching there, trail your stop close as it's approaching the prior swing high or low. That's how I typically do it. All right, you get it to break even and then let it run until it gets closer to the swing high or low, and then trail your stop right up next to price. Because if it bounces back off of the swing high or low, that's you get out and then you get into the next trade. Okay, that's how I do it, and that's how I do it. In here, Like for this one right here, you see it's getting all the way down here. I would have trailed it pretty close to right down here, and it looks like it probably would have just kept going. It wouldn't have stopped me out. It would have kept going, and I would have been trailing pretty close, just following it down. Then it pulled back over here, and it didn't give you another trade setup. I'm surprised, but well, I'm sorry. It did give you another trade setup. Let me undo that. Hang on. Where you go? Not going by the black arrows. It did give you another trade setup when it came out of the overbought right here. It gave you another trade setup right here. Okay, so it did give you that. All right. So did that answer your question? And Sean, you said, wait, was that the correct DOM for the chart we are looking at? This DOM, no, this DOM is gold. Earlier when I was looking at gold, it was the correct DOM. But when I'm looking to QQQ, it was not the correct DOM. Okay. And a couple of good days. Do I have any risk management? Okay. Yeah. Okay, you had a couple of good days with $400 to $500 of profit, and then you had a big down day in a single day. Well, first I gotta ask, did you do everything the same? Did you do everything right? Did you make any mistakes? Did you overtrade? Those are the questions that you gotta ask yourself to begin with. On the good days as well as the bad days, did you do everything exactly the same? Did you trail your stops right on the good days and on the bad days? And were the good days lucky? Were you doing things wrong the whole time? That's the first question you got to ask. All right. So when it comes to having a max daily loss, I don't really have one, but that's probably not the way everybody should operate. I have a time limit. That's what I have. I have 2 hours every morning that I have to just trade, and I trade until the 2 hours is done. Now you could do the same thing. You could have a half an hour every day that you're going to trade. Just set aside the same half an hour every day and trade, and at the end of that half an hour, you have what you have. You could do the same thing. Or you could say, I'm only going to trade 10 times, maximum 10 times, and I have what I have at the end of that. Or you could say, I'm only going to trade 5 times. And at the end of it, you have what you have. You could also set a max stop loss. Now, the thing that sucks about that is if you have your max daily goal is 500, and like you said, you had a few good days with 500, so you're up $1,500, and you have a $2,000 down day. So overall, you're down $500 plus all the stress of having traded all that time. It's tough to overcome that mentally, because I know that if I keep trading, I'm going to end up positive. I know that because I've been doing it forever, and I know the system, and I trust the system. I created the thing. But you guys, if you're new to it, then you don't have the same faith in the system that I do. You got to build the confidence, and having a big stop out day like that is not a confidence builder at all. So you could set your stop to be, 3 stop outs. And say if I get 3 stop outs, if I'm down 3 stop outs, then I'm just going to stop. And I want to throw something else out here while we're talking about this. This goes back to some stuff that I said earlier in the week, or not in the week, but earlier meetings. If you go to the 100 range bar, for instance, and you're doing the thing within a single bar, right? Like you say, you have an opportunity to go short or you're long, and you're on a 100 range bar, and you're on a 100 range bar, and you say, okay, I'm going to have a 40 by 60 bracket, and I'm going to take a trade when I get to 100 range bar, and it's going to fill me with 60 ticks, or it's going to stop me out with 40 ticks. You just put the trade on, you take the trade, and you let it do what it's going to do. And you do that until you get 3 wins or you get two losses. And if you do that consistently, and you should get 3 wins more consistently than you get 2 losses, then over time that's going to work out great for you. Right? So you're not going to get those trades where you're making, you have 10 trades where you only made 5 ticks, and then you have 1 trade where you stopped out 75. You're not going to have that if you do it the way that I just described. And that's something you can consider doing if you're having a tough time. If you're having days like that, so we're having, Good days we have 4 to 500 in profit. I don't know how you got to the 4 to 500 in profit. Was it one trade? Was it 10 trades? And I don't know how you lost $2,000. Was it 5 stop outs in a row with 10 contracts? I don't know. But but those are some solutions for you. Okay, some different ways that you can do things. You can limit yourself in time. You can limit yourself in the number of trades. You can limit yourself in dollars. You can limit yourself in the number of stop outs. All right, but those are all decisions you have to make. I trade pretty much on a time limit, really, and I don't end days down. I haven't had a down day in the room in since 2023. But knock on wood, knock on wood, I'm due. But I see right here. This would be a good trade right here. Why would it be a good trade? Well, because it's a 50% retracement of this right here. Okay. But the markets are closing in 9 minutes. Well, this market is closing in 9 minutes, 8 minutes. This is one of those ones that I would say, and I don't know, is Jessie in here? She's not in here, but Jerry's in here, and Sean's in here, and Terry's in here, and hang on, let's see who else is in here. Almost all you guys from town are in here. I had said something to Jess yesterday. I was talking about options because she doesn't know anything about options, and I was saying, you can use this stuff to trade options. And I was saying, if you get an indication to trade at the end of the day, and instead of actually putting the trade on and trying to hold it overnight, which is, you run into margin issues and all that stuff, instead of doing that on something like the QQQ, like right here, it just gave you a shorting opportunity. You could buy a put right now and hold it overnight, and by the morning, there's a very good chance that that put is going to be worth about 30 to 100% more. That was what I had said. So when there was a meeting that we did a couple of weeks ago where I said to do that at the end of the session, and I had pointed out where the price was going to go, and it was a long trade, and it had to go from like here to here. And the very next session, it did do that. It went from there to there. And like right now, if you were to buy a put right now on the QQQ or QQQ put, by tomorrow morning, I would bet right now it'd be worth some considerable amount more than what it is right now. Okay. Because of the volatility. Yeah, moving the stop to break even was getting hit because of the volatility. Well, that right there, I'm assuming that one solution that I told you trading within a bar would deal with that. All right, you're either going to stop out or you're going to get 60 ticks. You're going to lose 40 or get 60 if you trade, and that was just on the 100 range that I was talking about. Now on the QQQ, the 100 range is $1. So it would be you're going to get 60 cents or you're going to get, you're going to get, you're going to lose 40, you're going to get 60 is the way it works out with this. But, all right. That was a lot of information. So I talked nonstop for 54 minutes now. I think I covered everything that I wanted to cover, but I want to make sure I covered all your questions. And Wayne, you will get in at the open of the bar after the black arrow. Yes, after the black arrow, looking at the chart. Yep, the black arrows happen, and then you enter. Yes, that's the way that it works. Black arrows only trigger when the bar closes. Okay, if you're using range bars, that's a good point too, Wayne. If you're using range bars, they trigger when the bar closes. If you're not using range bars, they can show up intra-bar. Okay, they can show up and then go away in the middle of a bar. If a bar is being created and it meets the requirements for a black arrow on a 5-minute or any minute-based bar, it can show up and go away within a bar. All right. But if you're using range bars, then it shows up when the bar closes. Okay. All right. That was a lot of stuff. So I didn't do anything about the let me bring Telegram back over again. Okay. So you can see this is TV Trade Swing Channel. There's only 4 people in it. There's only going to be 3 people now that I think about it, because one of those people actually, that guy right there, he left for the summer. There's only going to be 3 people in it, but it's just got information that's getting put out right now that's not, well, it's not coming from this setup. Some of it's not coming from this setup. All right. The ones that are actual stocks, those are not coming from this setup. They're coming from a different setup. They're actually just coming from the regular TV trades. They're coming from this. Now if I shut that off, they are coming from, is it on there? Let me blow it up. Let's see. Yeah, they're coming from these right here. These arrows. That's what they're coming from. So, I mean, they're giving you great entries. Right? They're still giving you great entries. But that's where those are coming from. Alright, let me put that back. That's the stuff that I was showing you in the channel right now. These alerts that are triggering these other ones. Not all these ones, but the Microsoft one, like that one right there. That would have been from one of them. That's this one right here. Okay, and Tesla. I gotta go to the end of Tesla. See what that last alert was. It was this one right here. Alright. Alright, it's 3:57. This is good for me. Let's see. Again, I want to make sure I answered everybody's questions. And if you haven't taken the trial and you want to take the trial, go to tvtrades.com. Click on any one of these orange things. It's going to bring you down to the bottom. Just sign up for the trial there. All right. Greg. Is Greg in here? Greg. Nope. Wrong Greg. Wrong Greg. What is that Telegram? You're not in there right now. That's nobody's in that one yet because I'm still working on it. So nobody's in that one yet. That is where the swing trades are gonna go. And you know, I know a lot of you guys like to trade the NQ, so I'm creating an NQ only. I already have created the NQ only, but this is called TV Trade Swing Trades. All right, and that's this one right here. Nobody's in it yet, all right, because I haven't finished the alerts, making the alerts where I want to make them. But when I do finish it, then you'll all have access to it. Everybody that is an active subscriber or even on the trial will have access to it. Okay, and don't forget, you guys also have access to the TV Trades futures signals, and the TV Trades trade signals. These are more for short-term trades during the day. All right, and these are coming off the same thing. All this stuff right here that I just pointed to, that's where that's coming from. So all the things that you're seeing over here are going into this channel. Well, not all of them, but most of the things you're seeing over here are going into this channel or the other channel that I just showed you. And you do have access to that as well. All right. But what if you don't want to use Telegram? Will you get the indicator place on our charts too for the swing trades? No. Let me think how I'm going to do that. No. No, you won't. I'll see if I can come up with a way. See, Wayne, what I had been doing was, the question was, if I have Telegram but you don't want to use Telegram, can we get the indicator to place on your charts some other way? No, well, I mean, I have an idea. I just thought of a thing that I might be able to do that might work for you. I mean, I can make a spreadsheet visible to, I think I can make a spreadsheet on Google Sheets visible to just a certain group of people, I think. And, you know, it's already sending it like this right here, sends it to a spreadsheet. The stuff that goes out to the web page, it goes out to a spreadsheet, then it goes from the spreadsheet to the web page. You're the man. You're the man, Sean. And I do have Zapier. I can do a lot of things with Zapier too. But the thing is getting it in time. You know, I can do a lot of things with a lot of different things, but like the web page, the reason I'm getting rid of the web page is two reasons. One, you know, in the web page, you guys, you may or may not even know about the web page. TV trades, trade table. Okay, and I'm pretty sure I changed the password on this. So let me just try this password and see if it goes. Oh, okay, I'm pretty sure I changed the password. Okay, let's see if that works. Okay, it did work. Okay, see, and here's my notice. But it gives all this information in here for these different signals. Now, some of you guys know about this and some of you guys don't. But it gives information for all these different signals in here. The problem is you have to refresh the web page to get the current signal. All right, it doesn't. If you have the web page up like this, I just brought it up, so it's got the current stuff. The last one was at 1458 and a half, and 1458.50 was the last signal here on the Tesla. That's the same one that you just saw a second ago. But if I had another one come out right now, it wouldn't show up here until I refresh the page. That's why I was getting rid of the web page. Automation is your thing. Yeah, I do use Zapier for some stuff like emails that come in. There's automated emails that go out from Zapier. I capture stuff with Zapier, and I'm able to do stuff with that. But the thing is the timing. Like I could have the thing send emails out to a certain box that people could go and get access to, or to a spreadsheet that people could go and have access to. But the whole web page thing, it was a pretty cool idea, I thought, and I put it together, and I actually have stuff that runs in the background, so any one of these doesn't have more than 100 things, 100 trades in the history at a time. It's supposed to be, but it ended up being a pain in the butt because the way that WordPress that it's written on works. Every time I change a password, some people get the change, some people don't get the change. Then everybody's got different browsers, and different browsers do different things, and it's just a pain in the neck. So I'm just gonna ditch the whole thing. All right, so back here, I want to make sure I answered everybody's questions about all this stuff. If you haven't taken a trial, go out to tvtrades.com and sign up for the trial there. Okay, even if you have taken the trial and you want to take it again, go to tvtrades.com and sign up for the trial. All right. The swing trade stuff, you can see I have everything going out to the Telegram channel already. I just want to make sure that I have everything cleaned up and looking good, giving you good indications. Okay, and then it's just a matter of letting you guys know where the swing trade channel is, giving you a link to it, and you can all go out to that and start using it. The NQ channel is basically the same thing, but I wanted to do something with the NQ channel too to make it special. Thank you, Wayne. All right, it is 4:03, guys. I am going to wrap this up. If anybody has any questions, you can email. Let's see, I get it there and there at the same time. Now, that should be out on the web page right now, too. Okay, a GC long on the web page. If we go out here to the web page, GC, that would be a futures long signal. It should be right here. Let's see, now it's loading up fresh, so it should anyway. But this is another issue, loading up fresh, because it caches differently on different browsers, and this could take 2 minutes, or it could take an hour, or it could take a second. Some of them fill right up, and some of them don't. Forex currency pairs. Now, I don't trade Forex. I was just given the signals that come out of Forex, and I know the signals are good, but my understanding of it is that the trades that I'm giving you are like, it's like buying Bitcoin for, a 5-cent move, something like that. So I really need to work on the Forex stuff. Did this ever come in? No, it didn't. So to fix that, I would have to go out and clear the cache of my web page. I think that would do it. I don't know. But either way, you guys get the picture. If you have any questions, email support@targetviewtrades.com. Support@targetviewtrades.com. And I want to point something else out. If you go to targetviewtrades.com, go to the homepage of targetviewtrades.com, this is where the next webinar is. You can always sign up here. Masood, are you watching? You can always go here to targetviewtrades.com and sign up for the next webinar. All right. If you don't get the link in your email, come out here and see if it's here. All right, if you don't get the link in your email, because sometimes the emails go to spam, and I know Masood said he didn't get one today, and I know he got it. I know I sent it at least twice. I did check, and it was sent to you at least twice, and you didn't get it. But it's always out here on the web page, right? I haven't done next week's yet because I don't know what I'm going to do about next week's. I could do NQ and swing trade channels again next week and just change this to 4:30. But we'll see. Okay, sometimes during the week things develop and I have better context that I want to, better content that I want to give to you guys, and I change my mind about what the webinar should be about. But I feel like at the end of every one of these webinars, I got to get next week's ready and put something up there for you to see. So, all right, that's gonna be it. I'm gonna stop the recording right here.